Two dominant market themes this week have been earnings and the push-pull between short sellers and retail investors. We've especially seen that in the shares of GameStop. As you can see, they are now up about 77 points, but up from, if you don't have to go back very far to see it, single digits. AMC is also making a big move this morning. And then AMCX, which is AMC Networks. I think it sounds like AMC. There's some other news out as well, but that's making a big move as well. I don't know, because it's got those three letters in the name, maybe. They did a bond offering. Joining us now, Greg Branch, managing partner at Veritas Financial, and Ryan Dietrich, chief market strategist at LPL Financial. And Greg, I don't know if you've been watching the show or just watching the saga that is GME and some of the others. What are your, just off the top of your head, what are your comments about this? And does it portend anything for the overall market?
Right. So I think we have to separate two things. And so one of the things that we had a healthy debate about back in July was whether or not the announcement on vaccines would provide a catalyst for the market. And we saw that it did, where money rushed to things that we presumed would open up and have better fortunes once we were out and about again. And largely, I think AMC falls into that category, along with the airlines, along with other things. GameStop is another story altogether. There's no real way to look at that and explain it from a fundamental perspective. It's more in a camp of, is it being manipulated, for lack of a better word, by a concerted and intentional short squeeze? But there's no way to approach that or explain that in the fundamental terms that we're used to analyzing things.
I mean, can you defend short sellers that they're looking at valuation? Maybe they think something is going to zero, so they're allowed to, in the words of a lot of people that are defending the retail people, they're saying that the hedge funds started the manipulation by shorting more than the outstanding float or deliberately, trying to knock the stock down. So isn't that manipulation too?
Yeah, it could be. And I tend not to think of things in terms of word like fair or unfair. In our business, I think it's important that we recognize the rules of the game. And over the last 6-7 months, the rules of the game have changed dramatically. There's, a basket of stocks we could name that defy any type of fundamental analysis. And so I'm not for either side crying foul or fair or what have you. As a professional investor, if you think that things are not constrained to the normal rules or the normal analysis that we've traditionally used, then it's incumbent upon you, for both yourself and your clients, to just steer clear of it.
Ryan, comments on GameStop or wherever you want to go. Take AMC.
Sure, Joe. Right. First off, Joe, I haven't seen you in a while. Congrats on St. X winning the state championship in football a couple of months ago. 41-point win, the all-time record in a state championship.
The Bombers.
I know
that's
your alma mater
good.
There.
That's
right. But let's get to it. So, we took a look. The 10 most shorted stocks as of yesterday in the Russell 3000, they all were up significantly, most of them up between 50 and well over 100%. So this isn't just a GameStop story. This is a short story, people trying to blow up the shorts. And the next question is this 99, right? Is this a bubble? Is this frothy? We absolutely don't think so. Some of these stocks we know are going to eventually come back. That's usually how this works. But again, you look at put-to-call ratios being low, various sentiment polls really frothy. Maybe it's a sign that, hey, the market could take a little break. And think about this, Joe. We're almost to February, obviously. February, a post-election year, so this year, is the worst month of the year. Also, after the inauguration, after a new president, from the inauguration till about the middle of March, stocks do pretty weak seasonally. So it all kind of makes sense maybe after a 72% rally in the S&P 500, more in small caps, more in the NASDAQ. Maybe it's just time for a little break, and people are a little too optimistic, but we would absolutely buy that dip here at LPL Research as we still think this is a bull market.
Shepard Smith here. Thanks for watching CNBC on YouTube.